In its first year as a publicly listed company, Diversified Gas Oil, a US-based gas and oil producer focused on the Appalachian Basin, has said that revenue rose a whopping 144% on a more than 300% rise in EBITDA, and dividend payable up 173%. Chief Executive is Rusty Hutson. He joins us now with some more analysis of this. So you're now the largest oil and gas producer, I believe, on AIM. How have you done this?
Purely doing exactly what we said we would do at the IPO. We said once we raised that capital that we would focus our attention on acquiring accretive assets, which we've done. We've done about $90 million worth of transactions in 2017 and have expanded that into the first quarter of 18 with another $170 million of acquisitions since then.
Yeah. Do you therefore see a continuation of the sort of increase in business that you've seen over the last year repeated in this period?
Without a doubt. I mean, there's a lot of opportunity especially in the Appalachian Basin right now. We're seeing a lot of deals. We don't do them all, obviously, but we see a lot of continued activity there at very good multiples.
Yeah. How are you paying for all these?
A little bit of both, debt and equity. Obviously, last year we were successful in getting a new credit facility, which helped us to close on the larger acquisition we did in June of $84.2 million of Titan assets. But in the first quarter of this year, on the back end of $189 million equity raise that we did in January, we were able to refinance that at a much lower debt facility in terms of interest rate. And we have capacity now of $110 million of leverage sitting there at dry powder to do more deals.
Yeah, how are you able to do this in terms of staffing numbers? Because clearly when you're taking on this extra business, it creates extra workflow, I should say. Certainly in your in-tray must be enormous now compared to how it was. Yeah. How are you approaching the workload?
Yeah, so typically when we acquire these assets, we always keep the employees that come along. Those people were going to be displaced anyway if we didn't keep them. So the operational staff stay in place, which helps us obviously to continue to take care of those wells with the same people that were already there. And then we've really done a good job in the last year of increasing the capacity within our G&A structure to handle more assets and to continue to leverage that up.
What has been the progress you've made in terms of numbers then for production over the last year? And what are your mileposts for this coming year in terms of production levels?
Yeah, so we started at the IPO, I believe, at around 3,500 barrels of oil equivalency. We've done those a day. We've done those 3 transactions throughout 2017, ended the year at about 10,400 barrels of oil equivalency per day. And then with the 2 transactions that we announced in the first quarter, that puts us up to that 28,000 barrels of oil equivalency, which then obviously makes us the largest producer on AIM. Yeah,
I want to take a look at the share price in just a minute, but I think built into this is what I said at the top, is your dividend's gone up 174%. I mean, clearly this is a way to reward shareholders for taking on this new risk and so forth that you've got. How do you see the dividend developing? Was that a one-off increase, or are you looking to continue to reward?
No, it's a progressive. I mean, we have told our investors as we increase cash flows that we would return 40% of free cash flow back to the investors. Obviously, we've done that up to this point. We'll continue to do that going forward. I think the dividend yield at the full year 2017 dividend yield was slightly over 6%. That dividend will grow and probably, stay in that range going for 2018.
We've got the share price up here. You can see that I think you listed at 65?
65p.
65 pence. Here we are now at almost 87 pence. You've seen a little bit of an uptick in the share price here. We're not at the highs. How do you view the investment opportunity at these levels?
I think we're undervalued. I mean, if you look at the multiple, based on cash flows of the business, and look at our U.S. peers, not the U.K. peers, because it's hard to find peers in the U.K. cash flow production companies. But in the U.S., we're still trading under the multiples of the companies that compare to us in the U.S. So I feel like there's definitely upside in the share price. And I think as we continue to do exactly what we said we would do, which that's been I keep grilling it over and over again with our investors. Listen, I told you this is what I was going to do, and this is exactly what we've done, and we'll continue to do that. I think it'll resonate.
Yeah, but you also say in the statement that it's challenging out there, which surprised me on the oil side at least, because there is this big rise we've seen in the price of crude. What do you see as challenging?
Well, I think that, the thing you have to keep in mind is we're 90% natural gas.
Yeah.
And so the oil price, although it helps, doesn't affect us as much. So even with oil prices rising, natural gas prices have stayed relatively flat and really haven't risen much over the last year and a half. So that's always a challenge. We're hedged. We hedge our production. We got 36 months worth of hedges, about 70% of our gas production hedged. So we're insulated from downturns in the gas price. But overall, it's just, as long as natural gas prices stay in this level, the alternative is that we're seeing very good acquisition opportunities off that low commodity price.
Yeah. So this time next year when we talk, what do you see yourself and what are you going to be telling me?
I would say that the story will be essentially relatively the same. We're going to see acquisition opportunities that we're going to take advantage of throughout 2018. I think you'll see our dividend continue to progress in terms of dollars and yield, and we'll continue to do what we said we were going to do.
You raised more money? You raised money, of course, earlier this year, didn't you?
We raised $189 million of equity back in January. We're able to close on both of these acquisitions in the first quarter with equity. So we have debt capacity to go out and do further deals.
Yeah. Rusty, we'll have to leave it there, but thanks indeed for joining us. The Chief Executive of Diversified Gas and Oil, Rusty Hutson. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.